Thanks for joining in on our webinar, Producers, Insurance Explained. Note that attendees join the webinar in listen-only mode, meaning you've been muted. So Front Row, we provide insurance and risk management consulting services for the entertainment industry. We operate out of 7 offices across Canada and the US. Our senior account executives have over 20 years of experience providing expertise wherever and whenever needed. Front Row specializes in providing insurance solutions for a number of sectors, including the ones that you see here, notably documentaries, commercials, music videos, film and television, feature films, as well as shorter productions, equipment rental, digital, etc. So just a quick introduction of me. I'm your moderator for today on this webinar. I'm VP of Marketing at Front Row, and I joined Front Row in 2019. I'm a graduate of Ryerson University and the University of Toronto. Damian Schleifer, Executive VP at Front Row, specializes in developing insurance products and finding solutions for entertainment-related industries. Experiences include risk management consulting to film and television production companies, including animation and commercial production. Damian holds his BA from York University, his MA from Wilfrid Laurier University, and his CIP, Chartered Insurance Professional Certification. With over 20 years of experience providing a wide range of insurance solutions, Damian is a reliable, knowledgeable professional who crafts together the best possible coverage. So for those of us who maybe have not used GoToWebinar before, just a little bit of preliminary information here. If you do have questions, go ahead and type them into the questions dropdown, which you see highlighted on the slide here. And you can click the arrow at the top left of the control panel to move it in and out. And if you're interested, you can download a copy of the presentation slides that we'll be using here today under the handouts drop-down on the GoToWebinar control panel. It's in PDF format. So here's just an overview of our agenda for today. We'll talk about what Producers E&O Insurance is exactly, common types, rating factors and cost, insurance companies that are offering it, certificates, policy exclusions. We have an ebook that should be of interest to many of you as well. We'll talk about that and how to download it, and we will have time for some questions at the end. Before we begin the webinar proper, I just need to provide this disclaimer that the information provided herein is to be used as a general reference only and is not intended as advice for any particular situation. In all cases, actual coverage is subject to policy language, terms and conditions of the long-form policy documents issued by the insurance companies. And with that, I'll go ahead and let Damian take over. You can go ahead, Damian.
All right, thanks very much, Grant. And thank you to everyone for attending. We're just going to try and give you a fairly brief but concise overview of the different types of E&O insurance available for productions, as well as talking about some of the more important features of the type of insurance. So when we talk about producers, errors, and emissions insurance, it's very different to other types of insurance that most people are familiar with. When we think of insurance, we're usually thinking about insuring tangible assets or property. So you have a car, you have a home, you buy insurance. If there's damage, the insurance company replaces it. With E&O insurance, it's a little bit more abstract because we're providing coverage for content that you create, and the policy is intended not to pay the policy holder any sort of costs or settlements, but to respond to third-party claims against the content producer. So these are kind of unrelated people who might sue you because of the content contained in the production. So some of the features of an E&O policy and or perils that we like to refer to that are covered would be, as you see listed here. Here are 5 of the most common areas. There is some variation between different insurance companies, but generally speaking, we're talking about covering claims against a producer for invasion or infringement of the right of privacy or publicity. And this could be a situation where you might have content that looks at the personal lives or sort of behind the scenes life events of a real person. And that obviously, unless it's a public figure, and could very well sort of breach their right of privacy. Similarly, for publicity, if you're using someone's likeness or name in a production and they're not being compensated, depending on the type of work they do, the type of individual it is, you could be making money theoretically by using their publicity, so infringing on their right of publicity to earn a livelihood for themselves. There's also infringement of copyright or trademark infringement. And copyright is a fairly common type of claim that we see under E&O. And it can take a lot of different forms, but it's generally where someone feels that they have copyright protection for content. It could be images, characters, a number of things, and that you've used it inappropriately, without permission, or without a release. Similarly, with trademark infringement, this is really the use of someone else's logo. It could be their trade dress as well, how their company describes their logo, or you sort of used to how their logo or their company is promoted, and you've kind of copied it in a similar way. This could be unintentional as well. A recent example of this we had was a production filming workers at a construction site scene, and they were wearing hard hats, and unfortunately were using real hard hats that had a logo of a real construction company. And that triggered a claim from the construction company because they felt that their trademark was used, exploited in the film, and the scene wasn't a particularly flattering scene to the construction workers as well. So that can be an area that you can run afoul fairly quickly. Libel, slander, other forms of defamation, whether it's in print or spoken or depicted, where you've defamed someone, portrayed them in a very negative light, or said something that could be untruthful about them. Other sorts of things would be plagiarism, piracy, unfair competition, in using titles, formats, ideas, characters, plots. The idea is just kind of using these things without permission or paying for the rights or getting releases. So these are sort of the common, most common features that insurers would provide for producers E&O. And the main benefit to a producer's E&O would be the legal defense costs. Quite often that is the most expensive part of a claim and can escalate very, very quickly. Even if a producer is successful in defending against a claim, the legal costs can be quite expensive. Okay, some other features about our producer's E&O policy. We often get, particularly in Canada, questions from producers asking about title coverage. And many broadcasters will have a specific requirement that a producer's E&O policy includes coverage for the use of the title, but that the title apply on a worldwide basis. A number of years ago, it wasn't uncommon for producers to pay for a title search, but it was only done within one specific territory or country. So E&O policies were limited in the coverage that they provided for title, and it was limited to a specific country. As the internet sort of developed and a lot of things are streamed and online, it's really hard to contain content, and most producers don't want to a single country. So things can be viewed all over the world. So, many distributors or broadcasters are asking for proof that title coverage is provided on a worldwide basis. So in Canada, if a producer obtains a US and a Canadian title search together, insurers will accept that and provide worldwide coverage. In the US, typically it's just a US title report that's required. One thing to keep in mind is if you have international sales and the title is being translated into a foreign language, an English title search will not cover the use of the translated title. So if you have a title that translates into French or into German or into another language, and you need title coverage for that foreign language, a separate foreign language title search should be obtained. Many broadcasters, funders, bond companies require that E&O insurance be in place well in advance of delivery. And we recommend getting E&O insurance in place as soon as possible. It's very rare, but it is possible that you can get a claim that comes in prior to your even starting filming. So often it can come out of promotion or a press release that something is going into production, and sometimes you see these prior submission claims where someone alleges that they spoke to the producer several years previously about an idea. They talked about developing it, nothing happened, and now this person hears that the production's going ahead. So it's not always feasible, especially for documentary producers, tend to wait a little bit later on because they don't know exactly the shape of the production, what interviews, what film footage will be used, any photographs, that type of stuff. But you can get insurance coverage in place and address photos, film clips, music later on. So again, it can cost a little bit more because while you're in production, it could be several months to a year before you actually need to make a delivery of the production. But it is, again, theoretical, and it has happened. We have seen some very large claims into the millions of dollars for prior submissions. The other couple of things to mention is producers' E&O policies are usually very specific to one project. So they cover the content that makes up the actual film or TV series or documentary, but bonus material, whether that's making of footage, extra promotional material, websites, merchandise that is licensed for use. It can also be covered under a producer's E&O. We consider that to be a companion material. It's not automatically included with most insurers, although some do include, websites and certain things. But a lot of the time, you need to complete a separate questionnaire and get separate coverage for an E&O policy to cover extra materials. Some insurers do provide E&O insurance for policy terms up to 8 years, and this would be on a claims-made E&O policy. There are also occurrence-based E&O policies, and I'll kind of give a breakdown and description of each a little bit later on. But for film, most productions will purchase a 3 to 5 year policy term. With TV series, we're starting to see a little bit longer terms, anywhere from 5 to 8 years. Sorry, there's a little bit of a lag when I advance the slide, so we just jumped ahead a little bit too quickly. That's where we want it to be. So different types of E&O insurance. There are, when we talk about E&O insurance on productions, E&O is a very generic term used in the insurance industry. It's not used exclusively in film and television, but in all sorts of different types of insurance for different industries. Basically, it's an insurance against mistakes. And when it comes to producers, distributors, broadcasters, and others, there are specific policies sort of tailored to their requirements. So as I think I mentioned before in the previous slide, producers' E&O policies are usually purchased for a specific production. And a distributor's policy is similar to a producer's E&O policy, but covers an entire library of titles that a distributor might have. And it has the ability to cover certain productions that are in development quite often, and also has different conditions depending on the insurer for acquisitions. So when a distributor acquires a new production or something is going to be shown theatrically and it's being released, the distributor wants to make sure that they're covered for that acquisition during the year without having to report each single one to an insurance company. There is the ability for acquisitions to be automatically covered. Similarly for broadcasters, they do have coverage. Most broadcasters, not all, most have coverage for the content that they're disseminating. And often this includes radio stations, because some broadcasters started off, fairly small in as media. So there was mergers and acquisitions and consolidation. A lot of broadcasters have sort of inherited radio stations and other types of media. And so, which brings us to the next coverage, which is multimedia liability, which is sort of a newer type of coverage that many distributors and broadcasters carry. It's just a broader policy that allows different types of content to be covered. So not just filmed content, but also print material. Could be magazines, it could be advertising services, a whole host of different things can be covered under a multimedia policy. So it's premiums tend to be much larger for much bigger companies, but certainly a newer feature that we're seeing. And the two main types of producers' E&O policies that you hear a lot about are claims made versus occurrence policies. Those are the two main types. There are pros and cons to each. Claims made policy applies to claims that are made and reported during the policy period. So provided the policy is in place and a claim comes in and is reported to the insurance company, the policy will respond. The benefit of a claims made policy is it doesn't really matter when the infringement or incident leading to the claim took place. If it happened months or years before the policy was in place, quite often they will respond to cover that claim. So in terms of those prior submission claims, for example, that I talked about before, where someone says they were, the concept was theirs, they talked to the producer years before, this type of policy would typically respond to those types of claims. The only caution I have there is some claims made policies have a retroactive date. It's used more common in Europe and the UK, but the policies in North America also are built around having a retroactive date. So it's important that if you have a claims made policy, that does not contain a retroactive date. And what a retroactive date means is the insurance will only respond to incidents giving rise to a claim that happened after the retroactive date. The other type of policy that we see is occurrence-based policies. These have become much more common in the US and used for the majority of productions, I would say now. They have it's important with an occurrence policy to understand the definition of an occurrence. What does that mean? It's different with each insurance company, and it has changed over the years. There really has been a broadening of the coverage. Originally, it only applied to occurrences that took place from the dissemination of content. So the bad part about that was anything that happened before you bought a policy was not covered with an occurrence policy, because typically they only cover occurrences that took place when the policy was enforced. The good thing about an occurrence policy is even after the policy expires, it has sort of a continuum, or what we call a longer tail of coverage. If a claim is brought against the producer for an occurrence that happened some years ago, but when the policy was still in place, the policy will respond to cover that claim. Newer occurrence-based policies can have prior acts coverage added, and prior acts basically gives you the same feature or benefit of the claims made policy. But it's important to see what the definition of occurrence is. Many of the newer policies include the planning, pre-production, development of the production, and that's important. You want to see that included as well as just for dissemination. Another type of policy that's sometimes used by producers who have been around for a number of years and have built up a bit of a film library for themselves. And there's a blanket policy. These are often very customized, so I'm just going to kind of talk a bit generally about them. They're intended to cover a library of older titles that a producer might have, but can also cover new productions that go forward. So there are some differences. Sometimes there's a requirement that the producer buy a separate standalone producer's E&O policy for at least 1 or 2 years. Then afterwards, the blanket policy will provide coverage. There's other blanket policies that apply right away. So they're renewed annually, and as new productions come up, a producer is able to add the new production to this blanket policy. This offers some cost savings and streamlines coverage, because often the application process is a little bit simpler. The entertainment lawyer that the production company uses is vetted by the insurance company. If they're comfortable, approval is very quick, often within a day or two. This type of insurance, as I mentioned, it is customized, so there's a lot of variation. And it tends to be for larger companies that have a lot of volume production. I often get a lot of questions from producers. What's this going to cost? What's the E&O going to cost me for this? And this list on this slide kind of gives you an idea as to some of the things an insurance company looks at and will consider. So obviously the limits have a big impact. If you're buying a $1 million per claim, $3 million aggregate, that's generally the minimum amount of limits purchased in Canada and the US. But if you're looking for 5.5 limits, $5 million per claim, $5 million aggregate, the cost difference can be significant. Also, deductibles can help sometimes. If it's a fairly straightforward production, often a higher deductible can save you a little bit of money. If there's something more higher risk where an insurer is imposing a deductible because they're concerned about a claim coming in, that might not have as much of an impact on the premium. The length of the term, whether you're buying a policy for 3 years, 5 years, 8 years, impacts the cost, and also the type of production. So TV series and film are rated a little bit differently. Documentary has a really wide range, anywhere from nature documentaries or very straightforward documentaries that don't have a lot of people or contentious ideas in them, can be rated fairly low cost. But then, if it's kind of about a contentious figure or about people, can certainly be on the higher end. As we get into docudramas, which are a bit fictionalized but based on real people, those can be some of the more complicated and costly productions to insure. The country or origin of the writers or the owner of the underlying rights can be important. We're seeing that less of a concern, but I'd say the past 10 or 15 years, that was a big issue for insurance companies. The chain of title, similarly, if it's simple or complex, is a bit of an issue. If it's wholly original, hasn't been shopped around or reviewed with different companies, that's generally considered to be lower risk by insurers. And then the quality of the clearance routines used. So every application at the back has a list of clearance routines. These are things that the insurer expects that production is doing, and they might not be able to do every single one of those things, but generally speaking are trying to adhere to them as closely as possible. So if the insurance company is comfortable with the entertainment lawyer or media lawyer that's being used, that is known in the field, they have a lot more confidence that the clearance routines will be used, and a lot of questions on the application revolve around the type of clearance that was followed. If there's any problems with obtaining underlying rights or permissions, these should be sort of identified and discussed early on. Quite often, insurers will be helpful. Sounds strange to say, but will be helpful and can work with us to find a solution. If we find out later on that there's an issue or just before purchasing the coverage, it can be more expensive or have more restrictive conditions on the coverage. And then a producer's claims history is also important. If they have a good track record, have had very few, if any, claims, that's very good. But if they have a lot of contentious projects and have had lawsuits, that might lead insurers to, be a little bit more cautious. Some insurance companies in Canada still require a legal clearance process, so that involves the producer's entertainment lawyer to review the application and clearance routines with legal counsel for the insurance company. There's pros and cons to this. It's often a more lengthy process than simply completing an application and submitting it to an insurance company. The good thing about it is, especially for difficult productions, quite often the lawyers find a solution, a way out of a difficult situation. The insurance company has the ability to have their expert review the application, to ask questions about any of the answers. And so if there is a claim, it's still possible, but it's less likely that the insurer will hold you to the letter of that application for every single answer. Some questions can lead you to interpret what the insurer is asking in a different way, slightly different way. Some questions are a little bit tricky. We always recommend to producers to contact us if there's any doubts, or to talk to their lawyer just to go through the questions. Make sure you're not misrepresenting anything on an application, because if an answer to a question is answered, it's not accurate at the time of a claim, you could end up fighting with the insurance company as to whether that was intentional, accidental, or was it relevant to the insurer agreeing to go on risk in the first place. So applications, very important. Try and answer them as accurately as possible. They do form a basis for issuing the policy, and those are your representations and your promises to the insurance company. Some additional costs that certainly at the quote stage, producers might not be thinking about unless they've used to doing a lot of productions is, there's the cost of not just the policy, sometimes there's taxes to consider. There's the cost of the producer's own lawyer to go through the clearance and review documents and everything. And there's a cost of title clearance reports, script clearance, copyright and trademark reports, and then any sort of underlying rights or licenses that are needed as well. One question we get is, does it cost anything to add people to our policy? So generally distributors, broadcasters, financiers, there's no additional cost to add them. For Front Row, the policies that we issue, we include freelance hires and their loan out corporations automatically. So not every broker does, so or every insurer does. So it's good to ask the question when you're purchasing the policy, is our director or actors covered by this? And then also you might have a contractual requirement to cover their loan outs as well. So that usually is easy to do. Where it can get tricky is if you have a writer or you have a contributor of original content that needs to be covered under the E&O. Usually writers hired by the producer to write scripts for like a TV series, that's straightforward enough. But if if the whole production is based on the work of an author or some underlying published material, an insurer is not going to want to add that rider onto the policy very easily. They'll need a lot more information and additional cost could apply. In Canada, the insurers that we see most often offering producers E&O are Lloyd's of London. There's Beazley Canada, which is a Lloyd's company as well, but kind of specialized in a lot of niche areas, including entertainment. There's Chubb Insurance, Allianz, Axis, and Intact Insurance. So all of these insurers also provide coverage in the U.S. The U.S. has a few other insurance companies that are there as well, including Hiscox and a couple of others. But Intact is also one beacon in the U.S. Intact is the parent company. Many of them do require legal clearance in Canada. In the U.S., less so. Axis, Beazley, and Chubb do not. So again, they rely on your representations in an application and issue a policy based on those representations. So I mentioned this before about bonus material and other promotional material that can be added to an E&O policy. Policies have evolved. They have incorporated more modern language. Initially, they were policies that only covered television or theatrical release. So we're very specific and very limited. As DVDs developed and streaming and all sorts of other ways of disseminating content, the policies have evolved and are very broad, and generally speaking will cover most types of dissemination unless there's an endorsement that sort of limits it or restricts the type of dissemination. That's very unusual, but you know, that is possible as well. Most of the time, all sorts of different types of dissemination is fine, is covered by the policy. But if you're modifying any of the content, or if you've got different versions, sometimes you have maybe a 30-minute running time version and a 45-minute or a 60-minute, you should include all of those versions under an E&O policy in an application, just to make sure it's clear with the insurance company, because additional footage isn't covered. A lot of times distributors will create some promo material to go along with the footage. That promo material is not covered by the producer's policy. The distributor would need to rely on their own policy for that. Yeah, so just kind of continuing on with that. Production companies, especially on the TV side, we noticed a number of years ago started to receive funding and started to produce kind of companion material to go along with the series to help kind of promote it. So that includes video games, very common. Most productions will have some sort of social media presence and promotion, may have interactive websites, downloads, electronic press kits, soundtracks, merchandise, books, comics, all sorts of other things that can go along with the production to try and promote it. These can all be added to a producer's E&O policy, but they're not automatic. So again, important to talk to the broker and make sure that the policy is broad enough to cover all of these things. Sometimes there's an additional cost to add some of these things. A lot of the time there isn't, or if there is, it's a very nominal cost. The more expensive items tend to be interactive websites that have people posting comments, blogs, or kind of user-generated content sometimes as well. That can be more expensive and more tricky to insure, but and sometimes merchandise. But generally speaking, these things are fairly affordable to add and are an important consideration. We also get a lot of questions about certificates of insurance. They're important. They need to be issued quickly after the policy is purchased. Often it's a condition of financing to get these certificates out. And a certificate is issued by a broker, usually. Sometimes it can be by the insurer, but usually it's the broker. And it's really just a snapshot or a summary of the policy at the time the certificate was issued. Some things that all certificates should include to give a proper summary is the name and address of the policy holder, so that's the producer, the name and address of any additional interested party, so that could be your broadcaster, distributor, financer, the insurance company name and policy number, type of insurance. It should be fairly clear. Sometimes when we've represented distributors and broadcasters, we've seen insurance certificates provided as proof of E&O insurance, but they really weren't E&O insurance. There were other types of insurance. Some of them were liability insurance. We've even seen a foreign travel permit in a different language submitted as proof of insurance. So very important to get all these sort of things summarized on a certificate. It gives assurance to broadcasters, distributors that you've got all of the right elements in your policy. So the term of coverage, limits of liability, and a paragraph or a clause stating that the certificate holder is added as an additional insured. That's usually a requirement for most funders, broadcasters, distributors. The next area we get a lot of questions about are what's the difference between standard exclusions and non-standard exclusions. We started seeing a lot of broadcasters asking for confirmation that policies don't have any non-standard exclusions, and it causes a lot of confusion amongst insurance companies and producers as well, because every policy, every different insurer has a slightly different policy. So what might be standard for one company might not be standard for another. So generally, when we're talking about standard policy exclusions, we're talking about what is incorporated in each insurance company's normal basic policy. So they have a standard wording that they use. It describes the scope of coverage, and the exclusions, things that aren't covered, are normally listed as part of the standard contract. And there's a lot of similarity between them, but there's some slight variation. Some of them, for example, exclude claims against you for pollution. So if you pollute, and that doesn't make sense on any type of policy, but it's just a standard feature that the insurance company has. So when we're talking about those standard things, that's what we're talking about. Some examples would be some common ones between most insurers are things like patent infringements, if you've infringed on a patent, or if there's a claim against you for bodily injury or property damage. This type of policy is not ideally set up to cover those types of claims. For certain types of productions, bodily injury, property damage can be added back. We often refer to that as how-to or instructional coverage. If you think of a home renovation show showing you carpentry skills and someone copies it, for example. But generally, there's other types of insurance policies that are better suited to cover that. And then things like criminal acts, intentionally false advertising, disputes over royalties or between rights owners. It's not something insurers really want to address. Those are things usually within the control of the producer and their partners, and they don't want to be getting involved in that sort of a dispute. So for non-standard policy exclusions, these are the problematic ones, which I think a lot of distributors, broadcasters, and funders are concerned about. Some of them can be quite serious. There's a rough cut exclusion. This is used less, it's less common to see these. They were a lot more common at one point. They're still used a lot on documentaries. We really don't like them as brokers because they basically state that there's no coverage under the policy. The insurer will issue a policy, but there's no coverage until they've reviewed a copy of a rough cut and approved it. So it creates a bit of a false sense of security, and after the rough cut phase, the insurer can insist on changes, editorial changes. This can be expensive, and they're not covered by the insurance policy. So that's something that the producer has to think about. If something is scripted, it's usually easy to get a policy covered without a rough cut exclusion because you can go back to the script and really break it down and go through it with the insurance company. Film clips, photos, these are common to see, but are normally not included in the standard exclusions for a lot of insurance policies, so have to be added when the insurer agrees to cover you. They might say, well, you don't have the rights for film clips or photos yet. We're not covering it until you give us assurances that you've got those rights. Specified individuals or corporations, if you're doing a documentary about a company and some kind of bad deeds that they've been doing, might be okay in certain contexts, but until the insurer has the time to properly assess, they might exclude claims coming from that corporation or an individual. There's also limitations on your ability to publicize sometimes. So if something is contentious, the insurer might be fine covering it for theatrical release, but they might not be too happy about it being publicized, because that can, while publicity is important to let people know that the production is out there, it's been made, come and see it, it can also alert potential claimants. So that one is rarely used, but it's something to be really careful about if you do see it. Other types of exclusions could apply to certain territories, like your policy is only good for dissemination in Canada, but not anywhere else. Again, those don't make a lot of sense in this day and age. I did see one just maybe 6 months ago with that condition on it, and that's something that you really should try not to have on a policy, because anything can be put online and it can go outside of your country quite easily. Dialogue, scripts, music, failure to obtain rights and releases. Often that can be removed later on once you get the rights and releases obtained, but these are all considered non-standard. Okay, the next slide just summarizes some of the sectors that we specialize in, and areas, especially for film insurance, you can look at. We're talking about E&O today. If you take a look at our website, there's a lot of information in terms of blogs and different things that you can take a look at. This slide, we do have a program for documentary producers. It is a specific program with the Documentary Organization of Canada and includes errors and omissions insurance. So there is a simplified process, both in terms of quoting and clearance approval. So if you're in the documentary space and looking for coverage, that's definitely something to consider. If you're a member of DOC, you have access to much lower rates than the current market offers. So important consideration. It's very easy to join DOC, and the cost of membership is more than paid for with the purchase of insurance.
Okay, great. Thanks, Damian. I'll come in here. So we do have this ebook that it's free, and I think it'd be of interest to a lot of people on the webinar. It's on our site at the URL that you see at the bottom of the slide. So the ebook overlaps a bit with some of the content covered in this webinar, but it also includes a lot of information that we weren't able to get to in the webinar today, such as copyright reports, title reports, fair use, fair dealing, and so on. So this would certainly be worth a download. It does include discount codes for discounts on online insurance, on the various online insurance programs that we have, but this would exclude customers in Quebec, Ontario, and Saskatchewan for regulatory reasons. Okay, so now we have a bit of time for questions. Let's look at the questions. Damian, Rhonda asks, when does the E&O insurance kick in? When you start a production or when you deliver?
The E&O insurance starts when you purchase the policy. So, if you purchase the policy before, production is complete or delivered, you've got coverage in place. It will protect you if a claim comes in. Most claims usually occur after dissemination, after production is shown or broadcast, but it can certainly come in before. And so the coverage really starts when as of the date that you purchase the coverage.
Okay. Nikki asks, did the hard hat people come after the production company? If so, how much needed to be paid out of E&O?
Yes. So in that hard hat example, we've actually had more than one hard hat example with construction companies. They did, and eventually they agreed. The production company agreed after some back and forth to fix it digitally for any subsequent broadcast or showing if it was theatrical. I can't remember if it was television or theatrical, but they agreed to fix it digitally. So they would blur it out, and I don't think there was any damages paid, but just legal costs were paid. So that was under $100,000 for legal and the cost to fix digitally.
Okay. Julia asks, how can you provide coverage early on for a documentary when you don't yet know what archival or third-party materials will be used in the piece?
Yeah, that's a great question. A lot of documentary producers, raise that as well. Sometimes they're asked by their funder to get E&O insurance, and sometimes a broadcaster will insist on it, depending on the broadcaster, and it's really difficult because depending on the documentary, you're not even sure how much footage you're going to film, and then you're kind of putting it all together in post-production. So I would say you have a couple of choices. If you really insist and want to wait, you can certainly do that until you get all of those things settled upon, and then you can apply for the insurance. The risk is, and admittedly it's a small risk, if a claim comes in before you're doing that, you don't have any coverage, and then it's much harder to get coverage later on if you've had a claim that's come in. So if you're applying early and getting the coverage, you can do that. It just means that the insurance company will agree to cover you, but they might not cover archival footage, or they might not cover photographs or music if you haven't settled on all of those things yet. Some insurers, if you promise that you will clear all of those rights before dissemination, they'll agree to cover you beforehand. But that's a little bit tricky, because if a claim does come in, you have to prove that, yes, you did get all the proper licenses and rights. But there's a way to sort of get coverage, have like 75 or 80% of things covered and the rest not, and added later on once you've decided.
Okay, good to know. Aaron asks, if a documentary is using stills that are public on the internet, do you still need to obtain personal releases from those featured in the photos?
That's a good question. We normally ask producers to refer to their lawyer, because it depends, and the context also depends. Generally, for stills, there's a copyright owner, which could be the photographer or another individual or company, and then there's the people in the photograph. So often when you're clearing photos, you'd want the copyright owner's permission, and you'd also want the people that are in the photograph to provide permission. If the copyright owner can make that representation that the people appearing in the photo had provided it, and depending on the context, if it was public domain, your lawyer might say, you really don't need to worry about this, that it's fine to use. But it can also depend on the type of production that you're doing as well. So there's different rules, and then you potentially get into fair use, fair dealings as well with that stuff. So it's something a lawyer can answer fairly quickly if they have all of the information from you. But it's definitely worth running by your lawyer just to make sure you're on side.
Okay. Karen asks, are you required to get title clearance in order to get the policy, or can you choose elements that you wish to include in your policy? As I know the price for legal is quite high, so if you are only hoping for a film festival release, can you avoid some legal fees by choosing only certain elements?
Yes. Usually the expensive thing I think you've hit on is title, because you have to pay for a title clearance report. You have to have your lawyer review it, and that goes to the insurance companies. A title report, can vary depending where you're getting it from, whether it's Canada or Canada and US. So anywhere from a few $100s to $1,500 type of thing. So it's not necessary. Like the insurance company, they're happy not to cover title. It's not a requirement of the policy or of the insurer. Usually it's going to be a requirement for the broadcaster or distributor. Title claims are pretty common in terms of E&O claims. We see them a fair bit compared to other types of claims. So it's something I would encourage you to get, and if not right away, certainly by the time you have a sale. But the problem doing it that way is if there's a problem with your title, or if another producer has come out with something using the same title, and you've locked all of your credits and the title to the production, it might be too late or too difficult to change it later on. But to your original question, it's not necessary or a requirement if you want to hold off.
Okay. Kent asks, does a standard policy cover trailers, promotional one-sheets, posters, paid ads, and stuff like that?
It depends on the policy. A lot of them do, if it's advertising in connection with the policy, with the insured production. But some of them do not. So some of them are very literal. It's just the production itself, and any sort of promotional and extra material would not be covered. Like some will cover electronic press kits and others won't. So that's something that you should ask the broker to clarify for you. It's usually pretty easy to add on if a policy doesn't cover that stuff though.
Okay. Anna Lee asks, with respect to types of dissemination, are there policies specific to documentaries that are solely shown in virtual reality?
No. The policies are broad enough and are written in a way to cover dissemination, whether it's, we had 3D, virtual reality. We have where it can get a little bit different is if you have a funder and you're doing a VR project and they're not sort of a traditional film funder, but they're asking you if you have software, coverage. So we see that sometimes. It might not be relevant unless you're being hired by someone to do the VR elements. Then you might need that type of software, type of insurance if you're doing it for customers. But generally, if it's your own content for your own VR production, a producer's policy is totally adequate and proper to cover that.
Okay. Rick wants to know, how can an idea be copyrighted or infringed upon?
Yeah, so that's a good question. It's a concept or an idea. It might not be copyrightable, but if someone else has used it or claimed it and as their own and used it and it's been disseminated, and if you've copied that, they can still sue. Whether it's a copyright infringement claim or a different type of claim, depends. Often when we see these types of claims, there's a number of things. breach of contract, copyright. There could be a number of areas that come into play. It doesn't mean that they're right. It doesn't mean that that they'll win the case, and different countries, different jurisdictions can view this differently as well. So yeah, if something's wholly original and you think it's original and you let the insurance company know, they'll take that at face value, that it's an original concept. But if you've got something specific that you're worried about, or you know, you can definitely talk to your lawyer and find out, is there a way to protect your idea a little bit better? We've had clients trademark things because they had concerns. But just if you think of, we've had a lot of animation claims where someone alleges that the character or the idea of the interaction between two characters or the costumes of the animated characters looked like something that they had done previously and have sued in those situations. So we've even seen people trademark taglines. They see a production is going is filming, and the production, you know, is describing kind of a scene, or they want to market it in such a way and sort of have a tagline, and before they're able to get it out, someone goes and copyrights that or trademarks that, sorry, and then sues the production. So they're kind of like squatters in a sense. So a lot of strange things that go on. So E&O, it's good for those situations because the insurance company is going to pay your legal costs to fight those sort of baseless claims.
Okay, and does E&O only cover defense, or can it be used if someone steals your idea?
No, it's only for an a defensive situation. So if someone steals your idea or your copyrighted material, you would have to sue them. There's no insurance that will cover that. There is some sort of legal expense insurance, but usually would not fall into the realm of film and TV content. So I guess the answer is no. It would just be defensive.
How can I get a policy for a documentary shot in a foreign country?
So if the producer if they're domiciled in a specific country and they're filming outside in a foreign country, that's totally fine. They can go to an insurance broker in their country to apply for coverage. So for example, if you had a Canadian producer and they were filming a documentary in Africa, all of the content and people were there, and they were based in Canada, they can apply for coverage through a Canadian broker, Canadian insurance company. That's fine. They just need to know, as they're sort of going into it, that they still would be expected to have releases from people appearing and get rights to any content they're using.
Okay. So Sandro is asking, very small company, first short doc, no budget. Does he still need E&O, and is the premium full price upfront or diluted throughout the project?
So the premium is quoted. There's usually different options depending on the length of term that you'd like. So we can provide a policy that's an annual policy, or a 1-year term, 2-year, 3-year, 4-year, and the price varies based on the period of time that the coverage is needed. So if budget is an issue, or you don't quite have a distribution deal yet, but you want to buy coverage, you can buy something for a shorter term. And then as you get a distribution sale, you can extend it if need be and add on the distributor as an additional insured if that's needed. If it's very low budget and you don't have a sale or anyone requiring the coverage, then there's nothing forcing you to buy the coverage. You know, so it really becomes your choice as to what your risk tolerance is and how comfortable you are.
Okay. Maybe I have a couple more minutes here. If I have a web project produced here in Canada but being distributed on US platforms like YouTube, Can we purchase insurance here in Canada, or do we need to have to purchase coverage via U.S. offices?
So you, as a Canadian individual, partnership, or company, you would have to buy coverage in Canada. It will cover you for a U.S. Sale or U.S. Dissemination. Insurance is very tightly regulated. So strictly speaking, a U.S.-based insurance broker or company cannot legally sell insurance to a foreigner, meaning a Canadian or anyone that's not American. We have similar laws here. We can't sell to someone from Brazil or from Australia insurance. It's tightly regulated. It's intended to protect consumers from fraudulent actors. So insurance brokers, agents, and companies have all sorts of government regulation as to, how insurance has to be sold, who it can be sold to, and brokers and agents need to be licensed and certified and regulated by different agencies to make sure they follow proper protocols, ways of doing things. So a Canadian company should be buying from a Canadian company, a Canadian insurance company. U.S. client should be buying from a U.S. company.
Okay, what if we're doing our clearance via lawyers in the U.S., he asks?
That's fine. The insurer just has to be comfortable that the lawyer is qualified in what they're doing. But as a Canadian, if you prefer to use a U.S. lawyer, that is not a, it's permitted, it's fine under the policy. My only recommendation there is if as a Canadian company, if there's any Canadian laws or circumstances that could relate to your production, a U.S. lawyer might not know all of them. Similarly, some Canadian producers might be delving into U.S. people or events where a Canadian lawyer might not have the right expertise. So sometimes it makes sense to have a U.S. lawyer or both. Provided you're comfortable with the lawyer and they've told you they have the right expertise and understanding of the clearance and what the subject matter is, that's fine with the insurance company.
If you get a 5-year E&O coverage for, say, a doc series and it continues to be renewed or licensed elsewhere beyond 5 years, do you, as a producer, keep renewing the E&O as long as it's on TV streaming for years and years?
So usually if a producer gets a new sale, a new distribution or broadcast sale, they'll need to extend their policy or renew it. If it's for the same distributor or broadcaster that they originally set the policy up for, you need to go back to your contract with the broadcaster and distributor and see what was required. Quite often, they might retain distribution or broadcast rights for a long period of time. It could be 10, 15, 20 years, but they only require insurance for 3 or 5 years. So if that's the case, you may have satisfied that requirement, and then the broadcaster or distributor has their own insurance to cover the continual dissemination. If you are concerned for yourself and want to make sure that you're protected, then you certainly can renew it. It's usually to renew it is cheaper than buying it from brand new right off the bat. So that's definitely possible. Or as I said, if you have a new distributor that needs insurance, you may need to renew or extend the policy.
Can you elaborate more on how a distributor E&O can be purchased for multiple titles instead of purchasing a separate policy for each title distributed?
Yeah, it covers the same types of claims that a producer's E&O policy would, but rather than being specific to one production, there's language in the policy that says it will cover the library of titles. Some insurers ask to see like a spreadsheet or a document listing all of the titles. Others don't. For big distributors, that is not feasible because you're into thousands of titles. But the policy will just on a blanket basis. So it'll cover any production that the distributor is distributing. Usually there's a requirement that they have licensed it properly from a producer and have a signed distribution agreement. and that they tried to obtain producer's E&O insurance from the producer, adding the distributor to that policy. So if they meet those conditions, the policy will typically cover all of the productions in their title, including new acquisitions.
Okay. So for a feature film, is it typical to get E&O once the film sells or gets a distribution deal? How long does it usually take to get the policy in place approximately?
For feature films, it's usually you would purchase it before, because before delivery or dissemination. Quite often it's a condition for delivery, but even more often it's a conditioner for funding. So you might get an advance on funding, but then the closing for the financing will be contingent on having all of the insurance paperwork provided, including E&O.
So that brings us to the end of the webinar. If you have additional questions, feedback, or if we didn't have time to fully answer, again, I'll try to get back to everyone through email. You can also email the Toronto office here. You'll see the Toronto office email address listed there on the slide. For Ontario, if you're in another province, you can look at the Contact Us page for the other email addresses. Also, considering following Front Row on Facebook and/or Twitter if you're not already. We keep those channels regularly up to date. So thanks to Damian for an informative presentation, and thanks to everyone who joined in on the webinar today. The webinar has been recorded, and a YouTube link to the recording will be made available on Front Row's YouTube channel. So feel free to subscribe there. And assuming that the feedback on this webinar is positive, we're trying to do more webinars like this in the future, so be on the lookout for those. Thanks for listening, everyone, and have a good day.